Silence your phones, and we are going
You're
to.
see on and you're wrong. Anyway, okay. Silence the phone. Good Lord. Wait, you're recording.
I
Start
am.
over.
I'll
No,
edit it. I'll edit it. It's
start
fine.
over. You won't edit it. You'll forget.
No, I won't forget.
All right. You're gonna start at 50 seconds. You're gonna take the first 50 seconds out. You ready? Go.
3, 2, 1. Hey there, Sheila and Mike. Oh no, you know what I wanted to do? I wanted this to be first.
Yeah.
All right.
We need to start recording our outtakes before we get started because that's the most entertaining part.
All
Just
right.
saying.
All right. In 3, 2, 1. Hey there, it's Monday Mortgage Mayhem. Yes, Mortgage Mayhem, just like this picture shows you. It is Monday Mortgage Mayhem with Sheila and Mike. And today we are going to be talking about appraisals. Ooh, fun topic. Appraisals.
Good topic.
Yeah. So if you are a first time home buyer, or even if you haven't bought in the last 20 years, it's kind of navigated differently. But we're going to be talking about what appraisals are. Why do I need one? How much are they? Who pays for them? And then the different kinds of appraisals. So first off, we are going to talk about what are appraisals. Mike, you want to educate the fine folks about what an appraisal is?
Well, it's just basically a valuation of the value of the property.
Yeah.
Pretty simple.
And based on that value is what the buyer is going to get a mortgage on. So just because
Right.
a home purchase price, right? You offer on a home and the purchase price is, let's say, $400,000, okay? Doesn't necessarily mean that it's going to appraise for that price. It could appraise under that price, it could appraise over that price. And so, based on that appraisal, is what the mortgage company will give you for a mortgage, right? So, it's just the value of that particular home or what an appraiser deems based on their opinion and of course some
Right.
criteria that the home is worth.
Yeah.
Okay?
And sort of to what you said that based on that appraised value is what the lender's going to lend on. If the agreed upon purchase price and your offer is 400,000, but the house appraises at 420,000, the value the lender uses is 400,000, not
Correct.
420. So,
Correct.
but if it appraises lower than the agreed upon purchase, then the lender goes off the appraisal. So they always go off the lower of the two in either situation.
Correct.
In first situation, they go off the purchase price, not the appraisal. Second situation, they go off the appraisal, not the purchase price. The
Right.
lower of the two. Yeah.
So
Just that little
basically so basically if you're getting an appraisal done on your house and the appraisal is higher than your purchase price, you essentially in theory have equity in the house, so to speak, because your house has now been appraised or the house you're purchasing has now been appraised for more than what you're purchasing it at. So that means you have equity. When an appraisal comes in lower than the purchase price, what happens is you have to go back and renegotiate with the seller and come to terms with the appraisal price. So, for example, when I bought my house, we negotiated at like 160 or 170,000 or something like that, and this was back in 2010, 11. And so we negotiated at the price, and we were good there. And then the appraisal came in, and the appraisal came in at 120, literally 120,000, and we had our purchase price set at like 165 or 170. Well, we had to renegotiate. And when we renegotiated, the sellers basically knew that they weren't going to get anything more than 120 because nobody's going to bring money to the table in a buyer's market, which is what we were in. So they had to basically sell for 120. And so that's what we got the house for. So anytime that you are dealing with an appraisal that's lower, you're always going to have to go back and renegotiate unless you have something like like an appraisal gap or something like that. And we'll get into that later in the video. So that's the basis on what an appraisal is. It's the value of the home based on the appraiser's opinion and criteria that they've picked. All right. So we've talked about appraisal, right? Now we're going to be talking about why do I need one? So, Mike, why do they need to have an appraisal when they're going through their mortgage process?
Well,
Justify the value, right?
justify the value, but I think we got onto that question as we were preparing for this video, where we're talking about appraisal waivers
Right.
and whether or not, so the question of why do you need one is, also goes along with, do you need one if you're granted an appraisal waiver from the lender? Do you still need one?
Right.
And we kind of mutually agree that in most cases, especially on a purchase, when you're purchasing a home, you want that appraisal because you want to know what you're paying for that house, is that it's worth what you're paying for it. You certainly don't want to be underwater. If you're granted an appraisal waiver, and we can talk briefly about how you get an appraisal waiver, but if you're granted one and you say, great, I don't have to have the house appraised, you could be way overpaying for that house. Now, the appraisal waiver assumes, because of his things that are in the system, history in the system on the house, and prior appraisals and some of the comps in the area, it assumes that the value of that house is good. But many people in the purchase market, especially this purchase market with home prices so high, will still say, I don't care if I got an appraisal waiver, I still want an appraisal. Because
Right.
even though the system believes the house is worth it, I still want I want to know. I want an
Right.
actual appraisal. There may be a
Right.
chance that it'll under appraise still.
Right. So in a situation that we're in right now, we are saying, okay, well, there could be a chance we could get an appraisal waiver, but we still want to see what the purchase or what the appraised amount is that they come up with, because if it happens to be lower, right, we're not in this market before where everybody was coming with 30,000 over asking and appraisal gap guarantees and appraisal waivers and all this stuff. We are more in a market where especially when you're coming out of the winter, where you don't have big competition. And sometimes it's based on the home. Like if the home needs a little bit of work, or if interest rates are high and there's not that many buyers, like that type of thing. It depends on the situation, but um and you should talk to your mortgage person and your real estate agent, and they can best educate you on what they think is the right way to go. So because in this situation we don't have any competition, I'm suggesting to my client to get an appraisal done. And so that leads into our next t- um, bullet point, which is who pays for it and how much is it. But the reason I'm suggesting that it gets done is because we don't have competition. Is it really what that agent listed it at? Are they going to find the comps that make it that that show that price? Um, based on what that home is, it doesn't have a garage, it needs a little bit of work, that type of thing. Is that appraiser going to come up with that purchase price that we came up with? So, I always say go for it, because you never know if if you do CMAs as an agent, if I do CMAs and I look around the area, I should be able to qualify that purchase price. But honestly, sometimes, they may find different comparables than I found, and that price might be lower. And in that case, it would be beneficial for my client to um, to have had done the appraisal. Also, if it's a win-win, because if she has the appraisal done and it shows that that house really is like 415,000, then she's got equity in that house. So in a year, she could potentially do a home equity line, possibly to do some fixes or something like that.
Right.
So I think it's depending on the market you're in, depending on the situation you're in with each house. I think it's a good idea to do appraisals.
And
So
what's CMA stand for people not in the industry?
So CMA is a comparable market analysis, and what that does is it compares all the houses that are on the market, all the houses that have sold, and all the houses that are pending. Um, did I say active on the market? I meant active on the market, sold, and pending. So you compare those together to see if that price that you came up with for a purchase price is comparable to all the other things. So, is it a bungalow comparable to my bungalow? Does it have a garage versus no garage? And then you take and you subtract out that amount based on the fact that it didn't have a garage and that type of thing. So it's just comparing houses that are very similar to your subject house, which is the one you're purchasing.
Okay.
All right.
And
And now, Mike, who pays
yeah.
for them and how much are they usually?
So yeah, so to answer that question, the buyer will always pay for the appraisal upfront. Lenders and brokers cannot pay for the appraisal, assuming they're going to get collected back at closing, because sometimes houses don't appraise and you're not able to negotiate, and you move on to the next house. So clearly, the buyer has to pay for each appraisal that they have, and unfortunately, sometimes I've seen buyers go through 3 different houses and they have to pay for 3 different appraisals, 3 different inspections, because they've gotten these houses under contract, but for whatever reason, they've decided not to move forward with the house. So the buyer will always pay for that appraisal up front. It's then backed out of their closing costs because it's already paid outside of closing. And then in certain situations, like on our Homes for Heroes program, where in most cases we're able to comp back that appraisal, or if there's certain programs available, like there's a program right now based on where people live, they can get an upfront grant and the appraisal covered by the lender. But if that house that they try to buy doesn't go to the closing table, then they're going to have to pay for it up front, and they will get reimbursed at closing for that appraisal. So the buyer always pays for it up front, and it's about on average $495 to $595 on average, depending. FHA appraisals cost typically a little bit more than a conventional appraisal, but you plan on spending $500 to $550 in most cases.
Yeah. Okay.
During COVID, when it was just, and the refinance boom and the appraisers were busy, they were taking some liberties, and I saw some appraisals costing $600, $700, even $800. And if you wanted a rush, it was a $200 rush fee. So there was some some higher prices being paid during that coming out of COVID refinance boom, and the appraisers were busy refining everybody. But in a normal market, appraisals are happening very quickly, and on average about $550.
Okay, great, wonderful. All right, so the last things we are going to talk about is the type of appraisals. It's not so much the type of appraisals, but it's what you can do with appraisals. You can weigh them, you can get in gap, and so we're going to kind of touch on each one of those so that you can understand when you're talking with your real estate agent or your mortgage person, when they start using these terms, you can understand what they're talking about. So the first one we're going to talk about is kind of what we touched on already, is appraisal waivers. So Mike, you want to touch on that one? Because you're kind of really more educated about that than I. I mean, I know about appraisal waivers, but it's more on the mortgage side. So
Yeah. So appraisal waivers, a while back, when it was an ultra competitive market, like you referred to earlier, where people were paying $20,000, $30,000, $40,000 over asking, and everybody was trying to outbid each other. Agents and buyers were hoping for a leg up, so their offer would look more attractive. And to get the most attractive offer when you're using a loan from a lender is to make your offer as close to the offer that a cash buyer would be bringing in, because almost everybody's going to take the cash offer first. It's cash. They don't have to worry about the loan falling through or any of the unknowns. But then buyers wanted to have an appraisal waiver included with their offer, meaning we're not even going to appraise the house. We accept the value. We accept the purchase price. Well, that's not like a human being that makes that decision. It comes through a system called AUS, Automated Underwriting System. that is basically Fannie and the brains of Fannie and Freddie on the back end, and there's probably a lot of AI and stuff in there as well. But basically, it takes into consideration a few things. For the most part, your credit score needs to be 740 or higher. You need to be a strong buyer, first of all. They need to have confidence in you as a buyer. Secondly, typically 20% or more that you're putting down on a conventional loan. So 20% or more, so a large down payment, you have strong credit, and there's some history in the system of a prior appraisal on that property whenever the last appraisal was done. And then I believe it's hard to quantify this, but I believe there's also other considerations that the system has data of other appraisals that have been completed in the nearby area of comparable homes. There's all these algorithms.
Yeah.
And those algorithms, well, may come back when we run findings, when we do the pre-approvals, it'll tell us if that property is granted an appraisal waiver, meaning no appraisal needs to be done. The lender already accepts the value. It saves the buyer $500 on average, $550. It saves about a week's worth of the loan time because we don't have to wait for an appraisal to go out and come back.
Right.
And so, but we don't just say, yeah, I'll just give you an appraisal waiver. The Fannie Freddie AUS system determines if you get an appraisal waiver. And during that time that you mentioned, agents were constantly calling saying, hey, can I get an appraisal waiver? Can I get an appraisal waiver? I don't know. I have to find out once I run the findings and see if Fannie and Freddie say it's okay. They are the ones. It's not me. It's not the lender. It's Fannie.
And it's based, isn't it based on the address? Because I remember when I was working with some clients, and I would ask you, hey, can I get an appraisal waiver? And you'd like, I need the address. I need the address. So
yeah.
it's really,
yeah. It is property specific. Yes.
property specific.
And
Okay.
that's where the part of other comparable homes in the area, because it has that specific property address, and it looks to see if there's any appraisal history in the nearby history, at least 120 days or older. And then even within the last maybe year and a half, has there been an appraisal that we can count on the value is still in place? So yes, it's very property specific.
And then are these primarily done on conventional or can they be done on FHA, VA, that type of thing?
Yeah, that's a great question. So there's not that I've ever seen, there's no appraisal waivers granted on government loans. Government loans are the FHA and the VA loans. Part of the reason, typically most FHA buyers are putting down the minimum, most anyway, of 3.5%. So there's not very much equity there. If that home is short of value, that consumer could be well underwater from the beginning if we just accept the value and the house isn't really worth it. And FHA appraisals are much more stringent. So they're pretty much, there's no FHA or there's no appraisal waivers on government loans, VA and FHA, with the exception of if you're doing a refinance and you're already in a VA or an FHA loan, there's a VA IRRL, IRRL, and there's an FHA streamline where you're just doing a rate and term, no cash outs. You're just doing a rate and term refinance of your existing VA or FHA loan. There's no appraisal. There's no income verification. There's no W-2s. It's basically just shuffling some paperwork so we can get you into a lower rate in the same type of loan you're already in. But that's the only time you get a waiver on those types of loans.
Okay, perfect. So it's only conventional, right?
Yep.
And no FHA or VA, except if you're doing a refi. So
correct.
All right, cool. So that's what an appraisal waiver is. Now we're going to talk about appraisal gap guarantee. And honestly, these really came up a lot during 2021, end of 2020 and 2020, really in 2021. And an appraisal gap guarantee is when a buyer is going to bring to the table the gap between what the house appraised for and what the purchase price is. So let's say if the purchase price was $350 and the house only appraised at $340, then they would bring the $10,000 to the table, right?
And so if 10,000 was their gap, but if it was only 5,000,
then they would only need to bring 5,000.
Correct.
So this was basically guaranteeing to the seller, hey seller, we're offering this purchase price, but if the appraiser decides that this is, lower, or it comes in lower because, we were in a lower priced market before and we had lower comparables, right? So if it comes in lower, we're going to bring that extra money to the table. And this is how much we're willing to bring to the table. So some were willing to bring 10, some were willing to bring 20, some were willing to bring 50. So that it was just a crazy market. And when you and basically people would say, some people would say, and I've even seen this recently too, where they would say, listen, we're gonna gap it no matter what. So that means we're gonna guarantee whatever that gap is. And so that's basically saying we're gonna pay whatever this purchase price is, you know. We're doing an appraisal, but we're gonna put that gap in. So
And that cash, whatever that amount is, when they're getting pre-approved, we have to verify that you may not have to pay an appraisal gap guarantee, but if you put it into your offer, then I have to, as a mortgage person, I look at all the worst case scenarios and I have this conversation with all my buyers. What if it appraises for this? You're going to have to pay this. What if it does this? You're going to have, and we go through all these what ifs, and then they realize a lot of times, and the majority of real estate agents are incredible. Some are not. And I've had agents make offers without consulting me, and they put in these gap guarantees because they're just trying to get a feather in the cap. And I got the offer accepted. I've had agents make offers without, and the buyers don't completely understand that what we're talking about here, difference between gaps and waivers and guarantees and all this. It's very confusing. They've made offers that would drain the bank account, or even the buyer doesn't even have the money. Now the offer's been accepted. Now I get the phone call. Hey, we got an offer accepted. And an agent once said to me, hey, we got an offer accepted. I did a $7,500 appraisal gap guarantee. They have the money, right? Are you kidding me? An agent did that. A very seasoned agent did that. So that
and that's
stuff
really
happens.
that unfortunately is not working in the best interest of the buyer, because then
Of course it's
everybody's
not. Of
scrambling,
course it's
right?
not. And
Right.
then when I get a hold of the buyer and I say, do you understand what you've agreed to? Which, nobody called me. It was over the weekend. A house came up. They made an offer. Now I get the call. We have an offer accepted, house under contract. And I'm like, do you understand, if this house appraises for this, you're about $3,000 short on your cash. You don't have the money. Now your house is under contract. We don't know if that's going to happen. It could fully appraise and there's nothing to worry about. But it's always the what ifs.
Right.
And now, I mean, they had to go get gift funds. I mean, we made it work, but that agent got the offer accepted. Now we all scrambled to make the deal happen. And that's just not in the consumer's best interest whatsoever.
No, I mean, I understand from one side, oh, they got the offer accepted. That's great. It was in the best interest of the buyer. But you have to look at the whole scenario and what would play out. So yeah, I think it's in the best interest of the buyer to make sure that buyer can accommodate any of the scenarios that are going to come along on the purchase. So, but that's just me. That's how I do my business. So so hopefully everybody understands that gap guarantee now, which means that they're going to guarantee bringing a certain amount to the table to cover any type of gap between the purchase price and the appraised amount. Okay, so appraisal waiver means that they're waiving appraisals, right? So if you get an appraisal waiver, it waives that appraisal. The appraisal doesn't happen. The buyer saves money and basically is purchasing the house at that purchase price that they put into the purchase agreement when they offered on the house. Okay. So it's similar to cash, right? Um, appraisal gap is like the next one down, because it's saying, hey, we're going to bring this extra money to the table. Okay. Um, so I say it's the next one down because sometimes life happens and, before you know it, you're under, you've spent money. So, I think it's still a good thing, but I don't like guarantees. I like waivers over guarantees. So,
At least you
and
can feel confident in the value if you get an appraisal waiver. Fannie and Freddie are confident in it. You can feel confident that the home is worth that. But you still may, and when you're purchasing, like you said, you still may want to get the appraisal anyway. You don't
right,
have to take the waiver. You can still order an appraisal because that house still may short appraise, because appraisals are a crapshoot. They
right,
really are. They really
right. I mean, it's somebody's opinion of what that house is worth, and I hate to say it because, and I've had it happen to me. Appraisers, can appraise it. They're supposed to follow criteria, but I've seen appraisals not come back like they should have come back. I had my very first listing. The appraisal came back, and both the buyer's agent and myself were looking at it going, what? It came in like $12,000 shy. And we're both like, that is impossible. Like, there's literally a house right down the street that was at the purchase price that we were coming in at. In fact, it was over, I think. But my point is it's just an opinion of what the appraiser thinks it's supposed to appraise at. They're supposed to give you the comps they're using, and so you have something to go back on. But it's very hard to get appraisals changed. So, and then the other thing that people may not realize is on FHA and VA, I think it's on both of them. If those appraisals happen, what I should say, when those appraisals happen, aren't they in the system for like 6 months? So even if somebody were potentially selling a house and they had a FHA or a VA do an appraisal on that house, and then they ended up not going through with that mortgage, that would stick with that house. Is that correct, Mike?
Yeah, those appraisals can transfer in certain situations. Yeah, and they stick with the property.
Yeah.
Right.
So, yeah. So, anyways, all
Yeah.
right. So now
No,
we're gonna get on what?
I was just say one great, just really funny story is you listed my father's house after he
Yeah.
passed away, and his house. I mean, his house. He did no work or updates to it in 20 years. Nice house out in Romeo, big pole barn, and this pole barn was the swayer of everything. He had like a 12-car pole barn, not even a pole barn. It was actually roofed with heat and everything. But you ran solid comps, and it was comping out at about 229,000. We were like, well, we're in a market where we think we can get more. So we said let's list it at like 249, see what we can get. And everybody, it was a bidding war, and we had a buyer that came in that just wanted to have the biggest offer possible. So they gave us a $30,000 appraisal gap guarantee. And they never thought the house would appraise for much more than what we were asking anyway. So they say, well, we'll just do a $30,000 guarantee. We'll make sure we get our offer accepted. We had no idea that they wanted to turn the house into a pot farm.
Right. And
Nobody, we
we're
didn't
all
know.
going, no, it's never gonna appraise.
It's never going to
It's just
appraise.
never gonna appraise.
So
And
we
sure enough, it appraised at
at
that price.
299,000. 290. They offered 299 with a $30,000 appraisal gap guarantee, which meant if it only appraised for 250, they would what would they pay?
250, they would pay 280 or 280, right? Yeah, 280.
They'd pay 280. The house
Yeah.
appraised at 299. So they had to pay the full $300,000 for this house that was not worth $300,000. But it's such a crapshoot
It
with
is.
appraisals.
It
That
is.
industry, I feel, needs a revamping. On
Oh, yeah.
You
I've
send
said
three
that.
appraisers out, you're going to get three different values.
I've said that. I've said it 100%.
Yeah,
Yep,
it's
100
crazy.
times over. And the funny part is agents still call me on that comp. They're like, "Are you serious? You got 295 on that?" I'm like, "Yep, we sure did."
Yeah,
Insanity, insanity. So,
unbelievable.
all right. So
All
the
right.
last one we're going to go over is called ACE. And this is one I've never heard of, but Mike was just sharing it with me today. So, Mike, you want to talk about that one?
Yeah, just real quick, just to wrap up here. A lot of times when we run those AUS findings to get the loan approval, it'll tell us whether or not we get an appraisal waiver. And sometimes it'll come back and we'll get ACE, which stands for Automated Collateral Evaluation. ACE is basically a modified appraisal. I always say let's just do a full appraisal, because what ACE is instead of paying say $550 for a normal appraisal, you might pay a couple $100, and somebody's going to go out and literally do a drive-by. But the problem is they're not typically not going to go in the house. They're just going to take some photos, look at the property, and say, yeah, everything looks okay. The problem is it's a gamble, because you might spend a couple $100 and they go out and they see some things visually that look like they could be issues. They're going to come back and say a real inspection needs to happen now, because we see some things we're concerned about. Now you're going to have to pay for a real appraisal. And now you're going through 2 trips out there. It's like, why even bother with the risk of an ACE?
Right.
It sounds great, but it really isn't. I advocate we just skip it and we just do spend a couple $100 more, do a normal appraisal and be done with it. So to me, an ACE is just as good as no appraisal waiver, in my opinion.
All right. Thanks for sharing that.
Yeah.
So kind of to summarize everything, your appraisal happens on the purchase side, and it's to get that value of that home, so that way it'll either match or exceed, or sometimes not exceed, that purchase price that you put on the purchase agreement. And then you could get an appraisal waiver on the house, depending on if there's enough comps, if you're putting enough down. And then appraisal gap guarantees are if you're going to bring that extra chunk of money to fill in that gap between the appraised amount and the purchase price. So, any parting thoughts, Mike?
No, just that we know whether or not we get appraisal waivers during the pre-approval process. So if you're hoping for one and we're granted one, we'll put it on your pre-approval letter that this property and this offer has been granted an appraisal waiver, so the seller at least knows that you're coming in with an offer where they're not going to have to worry about the house under appraising. They're not going to have to even take the time to wait for an appraisal to happen. They don't have to worry about appraisal results or saying, hey, you need to fix this, you need to fix that. So sellers love to know there's an appraisal waiver, but is it really in the best interest of the buyer? Some cases, yes, some cases it's not. And then we'll forego it and we'll get an appraisal anyway. But we just want what's best for the consumer at all times.
Right.
The buyer.
I agree. And as we always say, we're here to educate you. If you have any questions about appraisals or why you need to have one or should you get one, definitely contact us. We're going to put our contact information at the end of this video. We'll put it in the description. But don't feel like you got to go at this alone. And especially now, with all this information coming out about this, our lawsuit and stuff, everybody thinks, oh, I can go at this by myself, or I can do it on my own. If you are educated enough, like if you have invested your time and energy in learning the real estate market, then, go it alone. But if you're a first-time home buyer, if you haven't done real estate in the last 20 years, my suggestion is get with a mortgage person, get with a real estate agent, especially people who are educating you, and sit down and discuss your best options, because we do this on a daily basis. We understand each and every scenario and what we think and what we can suggest for you to be that right path for you, where you're going to spend the least amount of money, where you're going to have a smoother transaction and that type of thing. So always connect with a real estate agent and a mortgage person that are educating you along the way and answering your questions. So
just one final thought on what you just said. We've both been doing this a long time, but even this topic of appraisal waivers and all these what if scenarios, like I still catch myself having to really think through it because it's complicated. It's very confusing. And this is just one of 1,000 moving parts of buying a house. is in certain markets, the appraisals and the gap guarantees or the waivers make the whole difference of even getting an offer accepted or not. So for a consumer thinking they can just go out there on their own, and or if they say I'm just going to deal with the listing agent and I don't need my own agent, you are 100% making a bad decision, because you need somebody, not only your mortgage person but your real estate agent, educating you and working on your behalf. A listing agent is always working on the seller's behalf.
Yep.
So when they do dual agency where they're representing both of you, like people just go to Zillow and they contact the listing agent and they say, "Yeah, I'll work with you." They think it's going to be easier. You're screwing yourself. I'm just
Well,
being
and
blunt. It's
I
not
mean,
a good idea.
this could be a whole topic for another video, but what I want to end on with that is if
Use an
it
agent.
with dual agency, the agent is not supposed to be able to discuss finances with either the seller or the buyer if they're doing dual agency. They are working in the best interest of both parties, so they can't really discuss finances. So dual agency, at least in my circle of real estate agents, we really try to stay away from it. We'll refer it to another agent or something like that, because we just don't want to muddy the water. We are really wanting to make sure we represent our clients well. Me, if I'm the listing agent, I want to represent that seller super well. I don't want to have to worry about anything on the buy side. And then same thing with the buyer's agent. As a buyer's agent, when I am a buyer's agent, that's who I want to focus on. I don't want to worry about the sell side. I don't want to worry about, anything with that. My goal is to focus on my buyer and what's in their best interest. So, yeah, we'll discuss another video on that topic, because it's you need to be represented, especially now. So anyways.
Yep.
All right. So I'm going to drop off. I'm going to put into this video at the end our contact information. So Mike, have a great day.
You too.
I
Thank you.
will talk to you soon.
You got it.